30-year bond struggle, Russia-Ukraine tensions escalate, bad PMI, Jerome Powell out on his press tour, spoiler alert, no resignation, no rate cuts, sorry Powell market, and tariff escalations by Trump yet again. This is just an average Monday in 2025, and while any one of these events would have put the markets in a tailspin a few months ago, markets moved up steadily throughout the day today. However, we're not in the clear yet with a few key levels still overhead, and as we discussed on Friday, Bitcoin is still in the process of correcting, but I think we're getting close. So, how are things shaping up for the week ahead? How's the MicroStrategy Tesla pair trade going, and where do the best opportunities lie? We're going to look at the key charts for stocks, commodities, and crypto to assess just that. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to The Trading Apologist. My name is Tom and I hope you all had a lovely weekend. Before we dive in, if you do find value in the content, if you could like, comment, or subscribe below, it really does help out the channel and helps get this content out there to more people, and it also fills the approval-shaped hole that I have in my heart. I have to apologize to you guys first. I wanted to share a link with you today to my next free perp trading class at the end of June, but that unfortunately went out first on the InvestAnswers channel, and all 80 seats filled up within 10 minutes. So what I'm gonna do for you guys here, I made a quick Google form where you can just put in your name and email address. I put that in the description down below. So if you'd like to be notified for the next free perp trading class, I'll give you guys 24 hours notice if you sign up on that form. And then if you're interested in any other trading education, you can also find my Calendly link down below. Today, I really just want to focus on what the charts are telling us because all those big news items that I mentioned in the intro aren't moving markets like we would normally anticipate. The old phrase, the truth is in the charts, really reigns true right now, and we have a few key levels overhead, and we're getting really close to breaking into all-time highs right as we're getting into the seasonality of the summer lull. I would not be paying attention to that this year or ever be paying attention to sell in May and go away because you miss a ton of opportunities over the summer, but that's a different story. But I have a feeling that because of everything that happened with tariffs, that things have gotten pushed around and pushed back a little bit. So let's see what the charts are telling us. However, there are a few things to pay attention to this week. First, Trump just announced this afternoon that there's now a Wednesday deadline for all countries to submit their final trade deal offers. And then right on the heels of that, right before I started recording, there was a simultaneous pause on tariffs on select Chinese goods that was announced, and this will run through August 31st. The market did like that and was up and after hours. Now, depending on how things shake out on the Wednesday deadline, this could very well be a positive move for markets too. However, if we just take a step back and think about what this might mean for what's going on behind the scenes, it's most likely telling us that the administration is a bit nervous about the legal challenges to reciprocal tariffs that came up last week. And they're most likely trying to lock in some solid wins before that 2-week appeal window is up. This aside, if we look to ForEX Factory for what's coming up, we also have a few things to think about. We have JOLTS job openings on Tuesday, ADP non-farm employment change and ISM services PMI on Wednesday, unemployment claims on Thursday, and non-farm employment change on Friday. So let's dive into the charts to see what they're telling us amidst all this turmoil. Okay, starting here on the S&P 500, and I just drew this red box here, don't let the color scare you, for this zone that was our previous consolidation at all-time highs. So we are just starting to flirt with that, and we're at the very bottom end of it right now, and we had this strong candle closing today. And I heard some people online say, oh, the S&P 500 is weak. It's just been going sideways for a couple weeks, and it's not maintaining this same uptrend. Well, uptrends like this don't last forever, and you need some consolidation. The charts were very much overheated, and the fact that we're consolidating right below all-time highs, coiling up below them, while some of the metrics on the charts cool off a little bit, I would say is actually a strong sign. We could be cooling off on the charts and we could be correcting, but the only correction we had, which was about a week ago, was going to test that 200-day simple moving average, and that's now living at our strong 5,800 support on the S&P 500, and all these other corrections have been maintaining above 5,850, which also corresponds to all this past support right here. So you can see this resistance support flip that happened for us. Now, as we get into this zone, I have one alert set here at 59.91, and then we have our most traded zone just above 6,000. So that psychological 6,000 number is probably going to be the biggest challenge for us. But after that, if we have some momentum to carry through, I don't see why the S&P 500 can't be in all-time highs sooner than later. And yes, I suppose we always have to keep our minds open to both sides of the market. And if some big event were to happen, some global conflict, or I don't know, something else going off the rails with trade deals, or something terrible happening in the bonds market, yes, we could correct. Of course, we could always correct. But barring any event like that, this chart to me is setting up in a coiling pattern to break out for the next leg up. If we flip over to the NASDAQ, we have a very similar chart setup, but with slightly more strength. We're above the point of control or most traded zone here. We're still coiling below a bit of resistance, but we don't have as much structure overhead to break through as we do on the S&P 500. We're also sitting further above the 200-day moving average. So as we've been saying for weeks, there is more strength in tech names. And we need tech names and semiconductors in particular to lead if we're going to get into all-time highs because of the weighting that they hold in the market. Okay, one chart I wanted to bring up that we haven't looked at in a couple of months is XHB, the Home Builders ETF. And the reason I wanted to bring this one up today is because there's a lot of talk of trouble in the real estate market with high interest rates and now a ton of inventory compared to the number of buyers. And yes, while I do see trouble in the long run for real estate, I don't think we are at the point of all-out panic yet. So the point of XHB is to determine if there's still strength in the home builders market. And this normally leads downturns in the land market. And by land market, I mean real estate. It's the biggest market in the world by 12 to 18 months. And this is the weekly chart. We had a bounce in April from these prior tops, which used to be resistance, turning that into support. And we bounced away and we've been weakening a little bit the last 3 weeks. But this is one I just keep on my radar and I check about once a month. And if we were to start to break down from this zone at about 85, then I would start to get a bit concerned and I'd think, okay, what's coming in the next year to year and a half? And major corrections and recessions are usually land-led because it is the biggest market. Right now, yes, we do have some drama in the background with the bonds market and that could throw things off as well. But there's a thing called the 18.5-year real estate cycle. And if you go back through the last 150 years of history in the US, you will see that roughly every 18.5 or 18.6 years to be precise, that there is a bigger recession that is spurred on by something real estate led. And the last one we had was the GFC. Getting into 2026 and 2027, we're hitting that time frame. So I would just suggest that it's time to keep your head out the window and see what may be coming. I mentioned a few weeks ago, and I'll say this again, that I have friends in the real estate space, and they're seeing more and more people take out home equity lines of credit on their house to pay off their credit cards and auto loans and other debt because the cost of living is just too much to keep up with. So they're essentially taking on debt to pay off old debt and leveraging up the asset that is their home. So I'm looking at that and everything that's going on with interest rates, and I'm wondering, could one of these things be the start of a bigger correction for real estate? But again, that's nothing we have to worry about right now. It's just something we have to be aware of and keep our eyes on moving forward. Okay, moving on to SMH. And if you look at the NVIDIA chart as opposed to this for semiconductors more broadly, it's a very similar chart, but is slightly higher and NVIDIA had a higher spike up. We need this sector to come along to see all-time highs. So I'm keeping it on my radar. We've continued to find support at the 200-day moving average right here. We did break down from the daily RSI, and now it seems like we have a bit of resistance overhead. If we break through this resistance at any point, I would anticipate that corresponding to a breakout of this zone right here. Sometimes we'll actually see this breakout of the daily RSI slightly before this. So this can be a lead in markets to give you an entry if you want to try to front run a breakout of the price action that might be happening here. And then we would be targeting all-time highs as our next zone of resistance, because really outside of these couple swing tops right here, we don't have that much overhead for the semiconductor space. Okay, we have to look at gold really quickly because it did break out of our downtrending resistance, but this happened Sunday night into Monday on the news of the Ukraine-Russia escalations with that mass drone strike. So there was a risk-off moment of money flooding into gold, but a lot of other things didn't follow that risk-off play, particularly with what we saw in markets today. So right now, my assumption is that this breakout in gold isn't going to sustain. If we do flip over to silver briefly, and we haven't talked about silver for about 2 months, but silver has been much weaker than gold. and we are just on the cusp of breaking into all-time highs for silver. So this is one just to pay attention to, because when things do break out into all-time highs and they have that blue sky overhead, they can run for quite some time. And from this run up, just using some price and time extensions from this consolidation and the last run up, we were targeting about 45 cents an ounce as a target for silver. So it's something to watch out for. If this does break out, it could be explosive. You can set an alert. And I always like to react instead of predicting, rather than buying now and saying, hey, is it going to break out? Because you still have resistance overhead. I would rather set an alert and be a moment late to this and get in. If you want to play this as a commodity play, yeah, you might miss it by a few cents, but you have a clear invalidation underneath, which we love here, to have a clear level to set your stop order below. And you could try to play this breakout and see if it hits that target up there in the mid $40 range. Okay, moving on to Bitcoin. And I'm starting on the monthly chart because we just had our highest monthly close in history at 104,700, let's say, for round numbers. So that's a very positive sign. I know a lot of folks were down the last week on the correction and, oh, what does this mean for the bull market? But as we discussed on Friday, we're now on the weekly chart. We had 7 weeks up in this swing. And traditionally, Bitcoin doesn't see more than 6 to 7 weeks up in any one swing. And when it does get to the 8-week mark, it usually leads to a longer correction. So I'm actually happy about seeing this corrective week that we had last week here. I'm thinking we'll have at least one more corrective week. In terms of balancing this run out, we'll have at least that 2 weeks, and then we'll have to see where things stand. But I anticipate we could be moving up to test all-time highs in as little as 5 days from now. Okay, if we go over to the daily, I'm just going to turn off the Confluence model clouds for a moment to clean up our chart. What I want to do is I want to give us a target for the speed of this run up and what we should be anticipating. And what I like to do is just draw a line from the swing low to the top of the trend here, or we could go to the all-time high to be a bit more generous with our trajectory. So let's just do that. Go to the all-time high. And I am going to make this, let's make it green so we can see that, because green is the color of money. I don't know if you knew that. Wow, what a unique thing. All right. And I'm just going to take this off the bottom of our move here. And this is giving us a target for this next run up. And you can see we had this underside support that we discussed breaking on Friday, which doesn't mean we're going to correct all the way back down. It just means that this uptrend needs to cool off and consolidate a little bit. And what I'm looking for is that we just generally maintain a pace to get up to this price level, which would be at 132,000 if we're taking that extension, that we would hit this zone before we get past this line in time. So I want to see, as the bull market is continuing, more momentum and an increased clip to the move so we can hit that price and time target faster than we did on the last run up. And just to give us a target, that would put us at Monday, August 25th right here, taking that price and time extension. So you can mark that up on your charts just as a roundabout target. So I hope that's helpful, just to give you a trajectory. If we're looking at support underneath, we have that 102,500 support right below, which we almost got to in this correction. And actually, the fact that we bounced away a little bit before touching that, to me, is a bit of a sign of strength. And if we were to break through this for some reason, which would put us close to this trend line, but we do have that $98,000 support below us, which is very strong. And I would not want to see this broken. Yes, we could still maintain structure if we go down to, say, up to like 92,000 down here, but anywhere below that, and I said this already in previous videos, but the trend would be in trouble at that point, and the thesis for this next leg of the bull run would have to be reevaluated. The other small thing you can mark off on your charts is just kind of an intermediate support. If you look at these candle wicks, we do seem to have a bit of underside support right here on this uptrending line. These, because it's over a shorter time frame, I wouldn't put as much weight in it as this yellow uptrend line that we had in the past, but it is just something you can mark for near-term support. If you're playing perps or doing anything like that, you could anticipate a bounce coming into a line like this, and if it breaks through, that's a clear invalidation for you. And you don't have to be playing a perp in Bitcoin. You can see this happening on Bitcoin, and you can carry that analysis over to whatever crypto you might be playing a perp in. So pro tip right there. Not so pro tip, but just a tip. Okay, moving over to Solana, and as we discussed at the end of last week, we have this double top that is potentially in play with a price target of around $133, just below this support line at 138. And we also broke below this big diagonal support resistance line, which if I go out to the daily, and let me just turn off the confluence model again to clean this up a little bit, this support line goes all the way back to almost the beginning of this bull run. And it played support till we broke down here on the tariff news, then resistance again, broke through. I thought it was going to give us support last week, and we broke back down. So that is not the best line to be underneath, and we're also still underneath the 200-day moving average on Solana. But the one sign of hope right now in this correction is we found strong support at that 150 psychological support. If you recall, we talked about, around 120, 150, 180. Those are big resistance and support lines in the Solana chart. But if we go in really small to the 15-minute time frame, I got in a little preemptively long this morning as we were consolidating down here and finding support, because I was looking at this and I was like, oh, this looks like the makings of an inverse head and shoulders. And we are just about to test this diagonal neckline, and we just got into that major diagonal resistance line, and we're breaking through it right now as we're recording. Oh my gosh, history is happening as we're live on the stream. All right, I'll stop being stupid. But if we break out from this neckline, let's draw a target for ourselves to see where that price point could get us. So we take that length of the head and we project it to the breakout, and we'll just assume it's happening here in the next few candles. That would get us to $167.80. And then we need to reassess to see what the chart can do from there. This is obviously painting a picture of a bounce for me in the near term, but I still have that double top in the back of my mind, and I'm thinking, oh, is there going to be more of a correction in the charts for crypto later this week? I think it's worth zooming out to the daily just to round out our thoughts on Solana and note how much weaker it still is compared to Bitcoin. In terms of our all-time high to the bottom of our correction, that 50% is still sitting at $195. And the fact that we're still underneath the 50% mark of this overall correction as Bitcoin is breaking into all-time highs is very notable. In normal instances, I would say this is a sign of weakness in the chart, and obviously we are seeing the weakness in the chart, but we also see all the market maker manipulation going on in the background that I suspect has been leading to this price suppression, and I'm hoping that we see that flip in the other direction of eventually running the price back up. Okay, I'm just going to bring up Fartcoin real quick because we haven't brought it up in a while, and it's starting to show strength. So if you recall, this was one I started playing a couple months ago because we had this very clear cup and handle pattern with a breakout target that was around 100. Where was it? It was like 115. Breakout target was about right here. And the thing I have liked about playing Fartcoin is that you can draw these previous support and resistance levels, and they're so clean on the chart here, and just stair steps its way up. So it's a gem to trade. And I got out of it when we started breaking down from the daily RSI. I mentioned this a few weeks ago. We also had these 3 down days, which normally marks the trend is coming to an end. As you can see, obviously it can keep running for a bit longer beyond that, especially in a strong chart like this. But last week, as that underside resistance of the uptrend broke, we saw that correction. And I had this alert set right here at 95 cents because I was anticipating a correction to about the 50% level of the move. We didn't quite get there, which is also pointing to strength. And right now, if you look at the chart, you can see how we're finding just a little bit of resistance at these past lows right there. So you can see how past support can turn into resistance. But because of the strength of this move away, this has bounced much faster than Solana or Bitcoin. If we just measure this little bounce out right here, that's a 20% recovery right there. So if you are playing perps, this is one that really respects the levels and it moves quickly. So be careful with leverage because of how quickly it moves. But this is a great breakout play right here. If you can see it get past these past lows, Fartcoin will most likely run really quickly to that $1.30 mark. And if you're playing the breakout from right here, let's say you don't nail it exactly, but you miss it by a few cents, that's a nice 10% move for you. And if you're playing with leverage, you can make a lot of that. And if it breaks through, you would anticipate at least a move to here, 23% up, or then all the way to the top of the range at 30% up. So if you know how to identify levels and manage risks with your perp trading, this can be a great one to make some quick gains in. Okay, we have to go back to Solana real quick because we just broke through that big resistance line and we're testing the neckline of the inverse head and shoulders pattern. So keep an eye on this one. Once this video publishes, you might know the results, but that price target of 167.8 roughly would be in play if this breaks and closes, let's say, a 30-minute or hour candle above it. And that could be a great perp to consider getting into. But because we just did a lot of work to break through this big resistance line and now hit the neckline, I anticipate maybe a little pullback or a little consolidation underneath before we can actually break through. But just wanted to come back to that to give you the live play-by-play. Okay, getting into the good stuff, which is MicroStrategy and then Tesla and then the pair trade. So you can see on the daily candle today, MicroStrategy made its way up almost to 380. We got to like $379 just underneath. And this daily RSI breakdown that I was watching earlier today when the price was at the highs, we actually got back above this RSI line and we were like about right here. And I was like, oh, maybe this was just deviation and we're going to be really strong. And I would have loved to see a close back above it. But right now we closed right on this line. So you can see how it played support for a day, bounced, broke underneath, resistance, dropped away, and now we went right back into it. So I'm still watching MicroStrategy, and Tesla is in a very similar situation, but from the other side of not really confirming support, not really confirming resistance here, and not showing a clear move away from that line. So something I'm keeping my eye on. If we just look at price targets underneath, as we've been talking about, we have that $344 that would be our next underside support. We also have a little bit of support at $352 from these past tops, but that $343, $344 is the main support from all these past levels here. And if we were to break through that, 320 is our next zone of support, and I really wouldn't want to see anything below that. But if we can see strength in this chart, and we can turn this trend around and break away, then I imagine we would be heading back up to that $420 range to see if we can break through this resistance zone. But I'm keeping my eye on the RSI as a lead. On the daily, the mean reversion is still cooling off. If we go over to the 4-hour chart, you can see that the 4-hour chart actually already bottomed here on the RSI and is printing buy signals on the mean reversion. So the 4-hour is showing more near-term potential for a bounce than the daily. The daily is still saying, hey, there may be potential for a bit more correction. So we just have to see how things play out when we're getting mixed signals between the 4-hour and the daily time frame. Okay, if we go over to Tesla, Tesla was a bit weaker today to start the day, and the pair chart was breaking down on this price action. And the other thing that was breaking down was the RSI. Actually, the Tesla daily RSI was all the way down here earlier in the day, and then it pulled back into the close. And if I make this big as well, you can see we closed right into support. So I wish I would have a clear answer for you on this one as well, but we need to see what happens tomorrow. Are we going to see that bounce away on the RSI, or are we going to break through and confirm this as a breakdown on the daily RSI uptrend? If we were looking to support below, you have a little bit of support there at that $325 that was our resistance on the way up that I was happy we broke through. And then the next one would be this gap fill at about $307, which is lining up right with where the 200-day moving average is going to be in a couple of days. So I would say that would play really strong support for us if we drop to the downside, which would mean we drop this daily RSI and the price action corrects a little bit more on Tesla. If we're looking at mean reversion, it's still fairly spiked on the daily, but if we go into the 4 hour, you can see that the 4 hour is much closer to correcting. We're at about the midline or a neutral level on RSI, and we're getting back into the ranges for mean reversion, but it is generally still more elevated than MicroStrategy is. And don't pay attention to this trend line. This is our daily trend line. It doesn't align with the 4 hour RSI. If you were to draw a 4 hour RSI support, which you can do, you need 3 touch points. And if we go back to here, we have 1, 2, 3. So you could say that we've broken down on the 4 hour RSI already. Again, that doesn't mean we're going to crash. It just means we're going to cool off for a little bit and maybe correct a little bit and find support in one of these zones here. But for me, the real important chart is the daily, and I'm watching what happens with this RSI tomorrow. Okay, moving on to the MicroStrategy Tesla pair trade. And if you recall on Friday, I said I was playing this slow. I swapped right away here and got faked out and had to swap back. And we never broke above 70 on the RSI on that last flip. And I was waiting for that to happen. And that happened today. And I have to say, I was too slow to act. I missed the flip. So I flipped a little bit more of my position here on this pullback. But I'm still waiting a bit to see what the charts will do. And maybe I'm going to miss more of this move. But with MicroStrategy into resistance on the daily RSI and Tesla into support, I'm wondering if that's going to impact this chart. But maybe this is a lesson for me to just trust the trend and trust the signals. And whenever we see that trend flip on this chart on the 1 hour, along with the RSI being spiked either below 30 or above 70, would be a good time to flip. And I could have made a lot more out of this, but maybe I can be a lesson to the rest of you. We're just going to have to see how this plays out tomorrow. And if this breaks down again and continues to go in the favor of Tesla, then I'm going to feel great about my decision, but you're not going to nail every trade perfectly. Okay, moving on to Hood here on the daily chart. And you can see that while our RSI is spiked and we broke that daily RSI uptrend, and while mean reversion is spiked, we just finally had a daily candle close in all-time high territory. We had been wicking into it and now had this decisive daily candle close. And as we said with our price targets, this puts this next price target in play at right around $83. And we're using a price and time extension from a previous run up last year. And if we turn on the profit taking model from InvestAnswers, you can see how our price target from this inverse head and shoulders off the bottom landed just below level 6, and we consolidated below that. And now we're starting to break through. And level 7 happens to align perfectly with this time and price extension target. So a bit of confluence there across traditional TA and some indicators to let us know what might be happening. Now, in the short term, because this chart is overheated, and I talk a lot about daily RSI breaking down, but I think it's important to note, if you go back to Bitcoin in December, the daily RSI trend line broke down on our first peak, and then we corrected for a bit and we had another all-time high, but RSI printed lower highs. So this can continue to break down and make more of a bearish divergence while the price keeps going up. So right now I'm scouting, hey, is RSI going to cool off as price keeps going up and volume is dropping off? And then it's a question of figuring out, okay, is this next price target going to be our point of more of a correction? The one thing, if we zoom into the 4 hour time frame, that was giving me a little bit of pause just in terms of a bearish pattern, is this rising wedge pattern here where you have a wedge like this. These normally, statistically, break to the downside more often than not, but that daily candle close we had got us right above it. So I want to keep watching this tomorrow to see if we can have follow through on this breakout. But right now, Hood is looking fairly strong, although some things on the chart are a bit overheated. So it's just a question of keeping your eye on it and seeing what transpires over the next few weeks. And if we get to this $83, to me, that would be a good point to consider taking some profits and then reloading on whatever correction may come, because I still do believe in the longer term prospects of Hood. Okay, Celsius, there are no changes from Friday. We are still just coiling and looking for that breakout. So nothing to report right now. But if you want some detail on Celsius, you can go ahead and look at Friday's video. And pulling up one that we haven't looked at in a while, I wanted to pull up Palantir really quickly because we are into new all-time highs. Today we printed a new all-time high by a few cents, and then we almost had our highest ever daily close. It's kind of right in line with this past bullish candle from Friday, but Palantir is getting more government contracts. There is an AI database that they're supposed to be heading up, which I don't love the sound of the government having an AI database that is probably analyzing everything they know about you, but that's a different conversation. Okay, so if we do get those continued breakouts on Palantir and we're running some extensions of 50% of the previous move, 100%, 150%. And what I'm counting as the previous move is not what we have drawn in right here. I'm counting this right here from the bottom to our recovery top that matches up with these all-time highs. And I'm already considering us in this breakout. You could measure this whole move, but this is just a little cleaner to me with this confluence of these two double tops. And so if we take a 50% extension from that, that takes us to a price of $155 and change. If we take the 100% extension, that gets us to $184.59. And then if we take the 150% extension, that would take us to $214. So I know some analyst price targets for 2 years out were at around 220. So that would be in the ballpark of that. And just looking at the clip of that, I would anticipate if Palantir continues on this trajectory and continues winning government contracts, even though it is very overvalued by some metrics, it could get there sooner than later. Okay, bringing up one that I have not talked about for a while, and shout out to Jacob Invest for getting me to pay attention to this one, which is SMCI, which I was in a while ago. I played this last consolidation zone right here. We had a bit of a falling wedge that we broke out from, and I was in it for this run. Didn't nail the top, but sold out at least in time. And then I got in again at this support right here, and we broke down from that and just kind of chopped around this support line, and I got out of it. And then we broke back through the 200-day moving average. I think there was a positive earnings report. We're also cleanly riding this daily RSI support up, but he flagged it to me last week when we corrected right here and we got a clean bounce away from the 200-day moving average. So I got in at around $39 and change. And then today we had another retest of this line that goes way back now as support, and we've been moving away from that. So this could be a good bounce play right here from that 200-day moving average. There is a little bit of resistance overhead. If I just draw a fib retracement from the top of that move to the bottom of our correction, you can see how we corrected from the 50% zone there. We always talk about that being the kind of magnet in the market. So as we come back up, watch that $47 range for resistance. And then if we can break back through, I anticipate we would most likely break these previous swing tops because we've been printing higher lows the whole way up, all the way since this bottom in November of 2024. And just to illustrate that, you can see swing, 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 big correction, but we did not break below these previous lows. And now we're on our next upswing with a little intermediate correction here. But for real strength, we would want to see that eventually break these past local highs of this top right here at $66. And all-time high price for SMCI is sitting at $122.50. I don't know if we're going to get there, but I would be happy with just taking a slice out of a little bit of a move here. God, these charts look ugly when I get all my squiggles on them. All right, let's move on. Okay, I want to bring one up from Friday, which was a failed trade, but I think this is a great example too, which was Peloton. And it's not a strong stock that I would invest in long term, but we had this classic inverse head and shoulders. We broke above the neckline, we retested it for support and the 200-day moving average for support. Well, today we broke back below the neckline, below the 200-day moving average, and we broke the daily RSI uptrend. So I got out of Peloton just because of the weakness in this chart. Technically, the inverse head and shoulders pattern hasn't failed. It can be considered confirmed, and a drop down like this can go all the way down as long as it doesn't break the low of the head and could still bounce back up and hit that just below $10 price target. But I don't want to ride this through all that. There's so much more going on in markets right now, and there are faster and stronger horses to be on. So just took the little bit of a loss there and moved it into other assets. Okay, so that's it for the chart. Solana just broke out of the neckline, so watch that $167 price target. I did want to get into some of the Bitcoin treasury plays like ASST and CEP because they were showing some relative strength today, with Bitcoin a bit weaker during the normal trading hours. It just picked up strength after hours, but I'm going to cover those another time because they haven't done anything too notable yet. So keep your eyes on the middle of the week for those trade deal deadlines and unemployment numbers towards the end of the week. We're also targeting the first turnaround timeframe for Bitcoin and crypto towards the end of this week. We're seeing strength right now, so maybe that's coming a bit early, but keep checking on the 1 hour and 4 hour chart. The daily is a bit too zoomed out. The 1 hour and 4 hour will be your first signs of strength. And just as a reminder, I am moving at the end of this week, so there unfortunately won't be a Friday video, but I'll try to do a quick iPhone update from the road depending on how all this develops, just to give you my quick thoughts on markets. But I'll be back to the regular schedule next week. I look forward to seeing you guys then. Bye for now.